Hello everyone, Tommy for the Market Zone here with a new weekly market analysis video in which I'm going to cover what happened today during the first trading day of the new trading week. This is going to be an update to the weekly market analysis newsletter that I published yesterday. So if you haven't read this week's newsletter, I suggest that you'll start with that. Go to www.themarketzone.net, go to the weekly market analysis tab and find the latest newsletter, and don't forget to subscribe. Make sure that you'll get the next copy straight to your email. Go to the services tab and press the free newsletter. Just add your email and you are set. I would like to start with the dollar index, which is probably the most interesting asset right now as we approach FOMC next Wednesday. The dollar index started with a small bearish move that brought it straight into the nearest support zone that I mentioned in this week's newsletter. The support zone included the 50-day MA line, the fast MA line, and also the trend line, which is the key element in the near-term future. As long as the price remains above this trend line, there is an option that it will continue higher towards the completion of the bearish crab. Now, the bullish reaction that we see to the 101 support zone, which is the nearest daily support zone, brings back the option of a bullish breakout scenario that will drive DXY above 102. Now I say this because we see that the buyers aren't scared from the bearish candle that we got last Friday, and instead they are looking at 101 as a potential buy zone, driving the price higher again, creating a potential higher low and keeping the trend alive. On the other end, as long as the price remains below this proven resistance zone 102 weekly structure, there is an option for another bearish pullback in the dollar index. So if you are bearish dollar, that's your price zone. You can see that the price reacts to this zone. Despite the rally today, we see sellers coming in right now. So there is an option that we will see another bearish pullback in the dollar index. That's an opportunity maybe to go long majors, go long gold, short-term opportunity as long as the price remains below 102. The bullish scenario will be relevant only if the price will close above 102, above Friday's high. Now the action around the dollar will probably start on Wednesday with ADP numbers, and later on we will have oil inventories. On Thursday we will have ECB that will definitely impact the dollar, and on Friday we will have NFP. So the action will start on the second half of the week. Pay attention to this price zone on the second half of the week. Moving forward to EURUSD, the mirror image of the dollar index, we see that the price reacts to the weekly structure zone that I mentioned in this week's newsletter, 1.06, 1.065. We see a bearish reaction to the 50-day MA line as expected, despite the huge bullish candle that we got on Friday. And we see that the price is testing the fast MA line that should provide support, and it will be interesting to see where will be the daily close. Basically, the two bullish scenarios that I mentioned in this week's newsletter remain valid. The two bullish harmonic scenarios are two aggressive C entries, one for a bearish AB equals C pattern, that's the C point, and the other one for a bearish bat pattern, that's a C point as well. The bullish scenarios will remain valid as long as the price remains above 1.05 or inside the weekly support zone. But in order to see EURUSD advancing higher, we need to see a close above 1.065. So take this into consideration if you are thinking about going long EURUSD. If you are bearish, focus on the 1.06, 1.065 proven resistance zone that currently the price reacts to. Jumping quickly to the German DAX, few updates. We see that the bulls are dominating the market. They are pushing the price higher following a red day. A red day can end up as a bullish pin bar, maybe signaling a bullish continuation move tomorrow and Wednesday towards the ECB press conference, the ECB meeting on Thursday. I suspect that we will see a bullish continuation move, maybe retesting the top of the trading channel inside the PRZ of a weekly bat. So if you are bearish, maybe you want to see the DAX higher. It will allow you a better entry, selling from higher level. And if you are bullish right now, you have nothing to be concerned about. The trend is still strong, the bulls are dominating the market. So again, depends on what you are seeing in the markets. Me personally, I'm focused on the PR0 for weekly bets, so I want to see the DAX reaching the top of the trading channel and maybe presenting some sort of a daily reversal candle that I can use to show the DAX at least towards a retest of the bottom of this trading channel. So that's about the DAX. The last two charts that I want to cover in this video are two sectors: XLU that reacts to the first PRZ among two harmonic patterns. We have a confluence zone of two harmonic patterns between 51.5 and 52.5. So we see that the price reacts to the first PRZ of the bearish cipher. A very interesting potential sell zone in XLU. And the other sector, XLE, the energy sector, that climbs today towards the resistance zone that I mentioned in this week's newsletter, that includes the fast MA line, the downtrend line, 72, 72.5. That's the resistance zone. That's a potential sell zone if you're looking for bearish opportunities on the energy sector. If you are bullish, obviously you need to wait for a breakout that will drive the energy sector towards the 50 days MA line and maybe towards the top of the trading channel. That's it for this week's video. Thank you very much for watching it. If you liked it, don't forget to share it, don't forget to leave a comment, and don't forget to subscribe and activate notification so you won't miss the next video. That's it for me. I'll see you in the next video.